Morning, everybody. How's it going? It's like we got Sergio and Craig and David and Dan, Rex, Will, Donald, Darren, Dan, Svenborn, Mad, Diana, Cliff, Ed, JB, Steven, Ted, Joy, Arturo, Andrew. Everybody, good morning! And all these subscribers, Harry, Kohler, Jay, Valerie, Larry, Opal, and Teo, Douglas. Well, check it out. Check that out. Look at that. Significant resistance right here. We can get above it. Guess what? The first sign of bullishness. Wow, what a day yesterday was. That was good for me. Hopefully that was good for you. That was pretty darn smoking right there. Pretty darn smoking. I mean, that was a beautiful day in the trading world right there. Pushing through. I'd like to see continuation. Of course, we're going to retrace just a little bit. This is another beautiful candle. Beautiful stuff all around here. We just need continuation. We don't want to take it back at this point. We get the continuation. Now, that's what we're looking at right there. That's the real, similar to the ES, Bitcoin is doing the same thing. Same thing. NASDAQ didn't actually poke in. Look at this. Didn't actually poke into the roadmap line. So while ES and Bitcoin are trying to push through, this one still needs to push in right here. Fascinating to me how they all line up. I'd love to just rip on through. Now, for anybody that got upset at losing your Discord access, just bear with me. We'll get y'all fixed up. I think I got most of the Termar Trading Lab people fixed up yesterday. That took there was an error in the CRM system, and it took us a little while to get it all sorted and fixed, and everybody to get back on the same page. So if it was just me, I could have made a decision and moved on, but it wasn't just me. There were other people involved. It took like half the day, and then so another funny story, I guess. I've been trying to get, I've been trying to add on a life insurance policy. It's part of what the financial planning thing I was doing back at Christmas time. They identified a policy that was going to expire that I needed to replace, so I applied for coverage. And when they ran my consumer, it's not a credit report, but consumer report for healthcare, I guess, something showed up that wasn't me. And I don't know if you've ever tried to prove that you didn't do something you didn't do, but trying to prove that you never saw a doctor that you never saw is darn near impossible, because nobody will talk to you because they have no record of you ever seeing that doctor, and they won't give you anything that says you haven't been there because you haven't been there. Oh my gosh, it's been 3 months that I've been fighting this thing. I spent 3 hours on the phone yesterday begging people to please give me something that says I was never a patient or never been to their facility here. It's a tough thing. If you've never tried to prove that you didn't do something you didn't do, that's darn near impossible. Darn near impossible. And it was it's a heart doctor thing too. So the insurance company's like, full stop. We want to know why you went to this heart doctor. I was like, never went to any heart doctor. Incredibly difficult. Incredibly difficult. And the doctor is out of practice. He's no longer practicing. So his records are at a custodian that's in New Jersey, and they're not very responsive. Wow. So 3 months at this, we might make it a fourth. Anyway, already burning down to the end of March. And welcome, everybody. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation tended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. Just because I've got stuff right in the past doesn't necessarily mean I will ever get anything right in the future. You may lose money doing this thing we do called trading, and if you want somebody to just tell you what buttons to push like a monkey, you need to hire and consult a financial advisor, which is not what I do. All right. Even if you're like, I just want to know the trades you're doing, be careful. Be careful. It's called shadow trading. Extremely dangerous. You got to be able to make your own decisions. All right. Why is it extremely dangerous? Because I may make decisions based on my financial situation that aren't correct for you and your financial situation. And if you don't have the power to make financial situations based on your financial knowledge and your financial situation, you need to educate yourself. Thanks for being here. Try to get you up to speed, but I do things a little different than other people. It's not suitable for all investors. I mean, I can ride things out to zero. I'm okay with that. Some people aren't okay with that. You know, if you're in retirement, you can't take losses. You gotta be more conservative on your trading. Go after the high probability trades. This week, it's kind of like I said yesterday, flash manufacturing services. Manufacturing actually came in light, which was surprising compared to the week before when we got manufacturing coming in strong. Services came in a lot stronger. We had President Trump speaking and whatever else yesterday. Today, new home sales coming up at top of the hour, about 35 minutes or so. We've got tomorrow, durable goods stuff may cause a little volatility in the pre-market. That's not usually a big market, doesn't really react to it much usually. Final GDP. Now, if this changes any, we've kind of honed it in here. If it changes substantially from where we are, there'll probably be a market reaction on Thursday. On Friday, though, PCE. This is the one people are watching here. Right there. That's the one we'll watch. See how inflation's running on Powell's favorite number. I don't really expect a substantial difference. Golly. Peach Monster always gets me a little bit. Love it. I love the flavor. Peach is one of my favorite flavors. Peach, strawberry, blueberry. Some of my favorite flavors. Now, if you've not seen inside TradingView right here, this is tradingview.com. We have the calendars button, and apparently we're not gonna let me use that button today. Cool. Jammed up. Reload. There we go. You can click on the calendars, and if you don't want to go to forexfactory.com/calendar, you can go right here. We have the Friday stuff coming up. You got to roll down. Like, there's a lot more on here, but I don't know that it helps you any at all. We can get the year over year. Forecast to be 2.5. Prior was 2.5. They don't really give you the cool graph like they do on Forex Factory. They just give you a few candles here. You can't really zoom it. Can't really do anything with it at all. Wish you could like click in here and make it bigger. Maybe you can. No, add calendar. Oh, let's see. Yeah, there we go. There we go. That's how we've been running on Learn Something New on TradingView. I learn new things. There's new buttons all the time. So if you don't poke around and, hey, what's this button do? You're missing out on TradingView. So 2.5, we've been 2.5. Maybe we take it on at 2.5. So this is PCE. We'll see what we get. This is year over year. They're claiming it's back under control. I don't know. I think we could spike again. If we spiked again, you know what that means, right? Probably going to take this one higher with us. This is the 2-year constant maturity rate. Take that higher. Could be an interesting thing. Interesting thing. Now, let's see. Supposedly, where was it? Where was it? Yesterday? Trying to find Bank of Japan's interest rate. I don't know what day they actually did their interest rate thing. I saw an interesting tidbit. Friday. I don't think I can search this stuff. Central Bank. I was looking for Bank of Japan, but I don't see where they made their decision. They did a rate change decision. They left it unchanged. It's kind of like our Fed meeting. Left it unchanged. And their 2-year rate spiked yesterday to a new all-time high. That was interesting to me because we've been watching the NKD, and yesterday it was being a little soft, but then it turned pretty green. Let's see, where Monday, yeah, we were struggling to get into this box. We turned it up green overnight too. Pulled it back late last night, ramped it back up. If we can hang in this box and rally to the top, I think that'll be very positive for global markets, US included. Right there. It's pretty, I mean, makes me wonder. I have no crystal ball. I have a bag of unicorn dust sitting on my desk right here. You've not seen it. Try to sprinkle it on the market. Maybe I get lucky. Maybe I don't. Sometimes I do. S&P opening up right in the roadmap line. Like I said, we're going to have to get through, like, the real resistance is 5,800. I said this last week, 5,800, 5,900. If you put it on X or Twitter or whatever you want to call that, 58, 5,900. If we get through there, we're bullish. That's the danger zone, if you will, of resistance. 618 level coming out right there. Right there. Yes, sir. And we got to get through. Got to get through to be able to go higher. I mean, it's like, well, duh, right? I mean, it's like sometimes the most obvious stuff is like, of course you got to go higher to go higher. But this is a major resistance zone. Till we get through it, we can't go higher. And we still have the possibility of bouncing off of it and coming back down and making a lower low. I am quite bullish that we're going to V-shape bottom this thing. Kind of outlined that whole theory yesterday morning. Drew it for you right here. This is what I think. This is what I think we're going to do. We're going to rally probably for the next 2 weeks, 2 weeks right there. Maybe top out right there, pull back, retest, or we can go on up. That's what I think is going to happen. It's kind of my primary expectation for the next couple of weeks, maybe the next month, 2 months, really. 3 months. I don't know. It can always change. Like, as we get new information, as we get more information, more price action, I'll be able to clarify what I think is coming. But this looks like the operative path. And it's possible that we don't actually do a 5-wave thing. We do a 1, 2, 3 up into that blow off top, out here somewhere late summer, early fall, possibly all the way up to this target up here, 66. And then the reality of the situation that we've created hits home somewhere out here in the fall. I think that's the top. Top for a while. Possibly could be a couple decades. Then we're going to go into a bigger correction. It's very possible that it might be called the Greater Depression. Not trying to bum anybody out, but you need to set your sails. If we top out right here, you need to be prepared for a longer downtrend in the market. I'm doing my best to prepare myself for that. This was a little swifter and faster and steeper and rougher than I had anticipated. The prolonged correction in crypto really has gotten me beaten down. Like this little spike didn't give me much. I mean, really, we kind of topped out with enthusiasm back here in December. This has been one big slog. That's kind of like NASDAQ too. We topped out back here in December. This was one big slog. I didn't really expect a big sideways slog with a big flush out at the end. That wasn't on my 2025 bingo card, even though I knew that we were going to rally after the election and then pull back after making higher highs. I mean, I outlined it. I just didn't have my positions in the right way to take advantage of how the price action actually went. So I got myself a little jammed up yesterday, brought more than half back in my main trading accounts. Everything else, all my other retirement accounts were all green yesterday. Green for the year. So, I mean, you got to plan accordingly. You got to trade accordingly. My retirement accounts never really went red. They just kind of were back to flat for the year right here. Got to set your sails. All right. Check your risk. Make sure your exposure's in the right places. If you don't know how to do that, ask questions. That's how we get there. I may point you to places I've already answered the question. At this point, looking for this to push on through with the NASDAQ. Do you have that big 618 zone right up there? 21.2. And really, I was saying 21.5. Maybe that may be the level we need to clear to go on higher. This one may do the exact same thing as the S&P 500, where we come up into this 21, almost 22,000 area. Right up here. This does have a different chart to it. S&P made a higher high here, while NASDAQ made a lower high. So they're on slightly different paths. And this one may come up into that zone right here, do the retrace, while S&P does its retrace before it can go higher. It's kind of the way I see this all playing out. Now, Russell here, nice enthusiasm, but I do expect it to kind of top out right in here. And if the S&P and NASDAQ top out right here, do their retrace, this one may only be able to get up in here through the summer. This may actually start being kind of lame and just chop around in here and then roll over. And this may actually lead us down. So this is one of the ones I'm keeping an eye on. And remember, like 85% of the population for the United States works in these small cap companies. This is where most of the country is employed as far as employed people goes. Like a lot of people work here in these Russell 2000 companies, even though the majority of the companies listed in there, nobody's even heard of. Kind of crazy. So this is a kind of a canary in the coal mine. This one topped out in November, ahead of the S&P and NASDAQ, kind of topping December. And S&P went on to make a new high in February, while this made a much lower high. So different paths, different markets, different conditions. Oil here, looky. Next resistance is at that daily roadmap line right there. I don't know how many days I've moved this line over and over. Maybe if I save it, it'll stick. Problem is I save it over here and then I save it on my other chart, and it, like, for whatever reason, it picks which one it thinks I really meant, and seems to keep putting it back over there. Gold. I think we got one more little push, maybe up to 31.1 left in here. We'll see what happens. This looks like we've got, it's not the big pattern I'm looking at. It's this pattern I'm looking at right here. This right here. 1, 2, 3, 4. I think we got one more little go right there. What I'm comparing with the fib line that's sitting just up off the top of the screen is this first move right here. This move right here. That one. I have the 3-point tool. Point 1. Point 2 is right here at the top of that move. So we're talking right here, and then point 3 is over here. So what I'm doing is I'm projecting this move right here off of this low right here and that right there. If you have an impulsive move, a different 1, 2, 3, 4, 5 here. This would be the 0 point. This is 1. This is 2. This is 3. This would be 4 wherever it bottoms. Hopefully it's already done it. And then 5 takes us up here. And typically, I mean, just a standard normal kind of proportion, 1 is equal to 5. And that's why you take the move from 1 and project it off of 4, and you get the 5 target. Now it can come up short. It can come up, it can truncate. It could come up lower than 3. It's not very typical. That's a very rare instance where we come up lower than 3. It doesn't have to hit ideal levels. These are just kind of like, it typically happens. So when I talk about the high probability trades, that's what I'm talking about. And then we look at this right here. We have a roadmap bounce. And that potentially gives us a little bit lower targets. 3072, 3080 right there. Maybe that 3100 again. We got the extension. That looks like a pretty good spot for gold to top out. So we may get that last little squeak in here before we get a bigger pullback. Do I expect a bigger pullback on the bigger time frame? Yeah, it looks like we're kind of topping out here. Can we get one last little squeak? Absolutely. It's possible. Gonna have to dive into the multiple. This is why multiple time frame analysis is important. That's possible. Maybe even up to here. Possible. But then we'll probably do a bigger pullback, bigger retrace. This is starting to look like 1, 2, 3, 4, 5 right there. And when you do the same kind of fib projection, the potential 1 right there off the potential 4, and we're coming into the topping zone right there. You can let me know in the chat if you like this kind of information. That right there, what I'm talking about, that right there, projected off of that right there. Coming into the top. Jumping back down, that last little move that we're looking at right there. Talking about this move right here. Right off of here. That's why 3100 looks like it might be a top for the last little move right there. This is the kind of stuff I do all day long in the background, checking stuff like this out. So I can come on here and just point it out. You're like, a lot of you are like, I get this question a lot in the background. It's like, how do you just come on and look at the chart and know? I spend a lot of time looking at the charts, all right? It's not just I come on here and pull it up and go like, oh, look at this right here. I spend a lot of time looking at these charts, all right? Now, if you don't have the time to spend looking at the charts, you follow somebody like me that does. Or, unlike me that I looked at 40,000 charts in 2024, according to TradingView, maybe you just pick your top 5, and those are the ones you keep up with. But remember, I create tools that go looking for the setups. Like the bonus trade I have at the end of the show today. I create these tools to go search thousands of charts and find the setups. Just because you're watching the Mag 7 doesn't mean the Mag 7 is set up for a trade right now. When you look at Apple, it doesn't really have a great setup yet. I mean, possibly it bottomed out where the A, B, C in a measured bounce kind of situation worked out. Maybe that was a measured bounce down. Scraped just barely the ideal target there. Possibly we're going to reverse and go higher now. Doesn't really confirm on the conservative side until we're above that 240 area. This area right here. Then we can go higher up to the target 267, 273. But like Amazon, if we reject this roadmap line or the 618, we could possibly set up a bigger downside. It's not necessarily bullish to go to new all-time highs. Now, if we can get above that level, quite possibly we could. These are just, things I keep up with. Microsoft truncated the target. I thought we would go just a bit lower. That would make that first move over here from last summer equal to the current move right here that we just did. Came up just a little shy of doing that. Is that bots, or is this just a correction that we come back up here and actually complete it? I don't know. Microsoft might not be set up for a while. Nvidia, not getting through the daily roadmap line, not even touching it. That would give me cause for concern. Is this tradable? I don't know. Like, if you're going to say, I only want to trade Nvidia, you're limiting yourself. There's not always a trade on Nvidia. If you're saying, I only want to trade Microsoft or I only want to trade Mag 7, you're limiting yourself. The biggest opportunities may not even be on those charts. Got to be flexible. That's why I look at like 40,000 charts, hunting for the opportunities. Bitcoin, I really want to see this stick the breakout right here. Really want to see this stick the breakout. Some stuff is indicating we might. I don't know. Ethereum has that big opportunity that it could turn around and go. Very cautious here. If we can't do the bullish thing and break through the downtrend highs and the daily roadmap line, we reject off of that, start making a bust down lower, it's probably game over for Ethereum. Triple digits is a very real possibility with the way this is declined and the way this is all set up. The move off of this high from back here in November 21, this came up, hit the resistance zone, turned down. If we get continuation lower, we're going lower low than we did back in June 2022. Gotta be careful. NKD, looking for that to bust in, like I said. Dollar hovering in this 618 consolidation zone. I thought we would stop here on the drop. We are just hovering. Where do you get this? Where do I find the 618? This low right here from October, drawn with this high right here from January. That move up, very swift and strong. This retrace right here was the 618 level. Is the 618 level that we're holding at right there. When I talk about the 618, I'm talking about a 61.8% retrace of that move. Very classic. Now, if we were to hold this area, break back above this consolidation up here, back above the daily roadmap line, back above this consolidation, it's likely we could go on to an extension up in the 110, possibly 111 or 112 area. It's possible. That's why nothing is guaranteed. The high probability thing, when you look at the bigger pattern that we've done since the September 22 high, would be the flush. Looks like this did a 1-2, somewhere in a potential 3. We might do a 4, and then we get a 5, then we get a 1-2-3, back up in this zone, and then we get another move down, eventually targeting the low 90s, but this could take a few years to work on out. All right, might take a while. I'd be hunting for this one for a while. Now, today at 5 p.m., I have 30 minutes of awesome. That's why I do requests for at least 30 minutes. If you want to come hang out with me, that would be super awesome. Because without you coming to make requests, what good's a request show, right? So make sure you subscribe. Make sure you hit the bell with the notifications. Put an alert in your phone. Come back and see me at 5. And then we're a little light on the crowd today, as it is. So I welcome feedback and what you want to see and know and hear. If you like anything I say, if it's helpful, beneficial, give me a thumbs up. Carvana, looking for this to break through the 618 and take an extension on up here. We do have the gap down off that prior high. That may, we could fake it out, bust up in here, and then get a bigger retrace before we can come on up or break on down. That's a cautionary chart here on Carvana. I do not like the fact that that correction that we just did went lower than this correction back over here in January, December, January. Don't like that. Don't like it. That's a warning sign that this may come up here, find resistance, and roll down and start a bigger downtrend correction. CRWD. Oh, baby. Look at this beautiful setup right here. If we get the daily close above here, probably going up into this area right here. Pretty darn nice. 80% of the time this works out. Only 5 trades though, so that's not really statistically significant, but it has a nice profit factor. That one might work out right there. May very well work out. Looks pretty spicy. Net, again, we break above the 618. We go on up. There's the target. There's 618, 152. Looking for this to come on up. Break above this area. Sets up the conservative entry on a daily close above that level. There you go. Lulu. If you have no idea what I'm talking about on the why this pattern works, go check out my video pinned to the homepage. Click my name underneath me. Go to the channel homepage, watch the market roadmap video, my favorite indicator. I'll tell you how this whole thing works. This right here looks like a setup to get this move up here. Probably getting close to a double on shares, potentially. So what this looks like, it's a little different pattern here. I call this the measured bounce. We did this first move up. We did a retrace, and now we're looking for the next move up to be proportionally bigger. Now it may stop at 500. Here's your tell. How do we know if Lulu is going lower, Lululemon, or if Lulu is going to break on out and go higher? If we come up here, 505 area, stop, turn down, break back below the roadmap line, and start on down, we're making lower lows than the low we made back here. Probably lower than the low we made back here in COVID. If we break on up, get above that 505, like significantly above, we're talking about up here to 626. We'll probably do a little consolidation, stay above the breakout level, and then go for an extension. This is big picture, probably years down the line for this to all play out. It could go fast. This thing does typically move kind of fast. And we're stuck right at the daily roadmap line right now. That's the minimum upside is probably 505. If I was betting on it with options, I'd probably play out at least till next January right now. FNGA. Probably come back up to the daily roadmap line. App. Same as the other patterns. That's a beautiful market roadmap bounce. Back up of the 414, 415, 415 area. Shooting for 566 on the next extension target. Say all the words in with all the letters. And Tesla. Potential resistance right there. We were getting a little pop. Now we're getting a little retrace as the market opens here, digest things. If we can get back above this daily roadmap line resistance, lagging a little bit behind NASDAQ, a little bit behind S&P. There's potential resistance right there. I've got a lot of things drawn on this chart. There's a lot of things been going on here. A lot of things been going on. That high, we overlapped it. That's not good. Not good. Not what I wanted to see. This right here provides our major 618 resistance right there at that consolidation. That's the major resistance. So we could see a rally from 273 if we bust through this roadmap line right here at 300. You can see a rally up to 400 pretty quickly. That may provide resistance to retrace before we pop on up. That might be what we do. And this may set up a 618 retrace. And if it does, and it stops at the roadmap line and a 618 retrace, that's the rocket ship pattern. Look at that. Beautiful potential. So this could go ripping right up here. Top in that area, come back down. This right here, if it does this, where it's the 618 and the roadmap line at the same point, and we trigger this, watch out. I hunt for this pattern in the market. There's a lot of things that got to go right to get this set up right here. When this pattern sets up, that's where I make the giant returns that y'all have seen me do over and over. That's when you can catch that one right there. That's where you can make some big money in the market. Because usually the market's pretty bummed out about, like, we failed to break out. Prices get really reasonable. I'm not saying that's going to be the case on Tesla, but we'd be looking at this next move going right up here, 584 area, right in there. A lot of things got to be right. And then that wouldn't be the last move, likely. We'd see a retrace, hold back above this, and go on the final move being equal to this move right here. Get that extension. You can do this stuff with fib lines. You can do it with just lines. That put us a final target somewhere up in the 680 area before we do another pullback. That'd be cool. There's a lot of things got to go right for us to make that happen. See what happens. PSIX. I've got quite a bit invested in Tesla. I believe in the upside right now. I believe it's, I believe that there's a somewhat wrong perception of what the company is. Potential upside right up here on Power Solutions, PSIX. SAP is the wrong ticker. for whatever reason, when you type in SAP on TradingView, the default is the German version. Probably up to a 618 retrace, and we may get the next move down. Did not hit the roadmap line. There's the 618 right there. Like I said, we're probably up to a 618 retrace. And if we hold right here, we're going lower. If we break on higher, 299, 304, possibly 318 on the upside there. T and a win. My gosh, this is a dumpster fire right there. Don't mess with that stuff. Don't mess with these charts right here. I'm telling you. Short seller's dream. Never even been above the roadmap line. Reverse split. Reverse split. Stocks that reverse split are not bullish. They're not banging investment opportunities. They're just not. I stay away from that stuff. Just stay away. Loomis, ALMS, looks like a pending dumpster fire. Probably continue on down. Get down in here, do a reverse split, get some craziness, and continue their path toward going out of business. Royal Caribbean, potential for this to break back above the 248 area and get extensions to 289, possibly 298 up there. Capital One, 191 is the conservative entry. 217 would be the target. 217. PTIR. This is just PLTR. Watching for resistance right here on the bounce. If we stop in there, turn back sour, coming down to the roadmap line, maybe even something deeper on PLTR. Mobileye looking kind of bearish. It has a measured bounce setup. This is not a rocket ship setup. Got to get through the daily roadmap line. If we don't, this is off the table, and we're probably gonna go boop, right down here to lower low in the somewhere in the $7 or $8 area. Highly likely somewhere below the low we made back in the fall in September on MBLY Mobileye. All right, stuff that was declining today. I go pull everything moving up $2 more, put it on that gainers list. Down $2 more, put it on that decliners list. KBH Home. These things still, let's see. DHR, DR Horton. No, that's Denier. DR Horton, was it D? Golly. DHI, DR Horton. Still looking rough. Nail. Still potential to go lower. I'd be very careful trying to pick up the pieces on anything home builder related yet. Still think we have more downside to go before this shakes on out. Don't think we've wrapped this up yet. RGC, biotech. See this ridiculousness, right? You see this ridiculous pop? Probably going to take it all the way back down where it came from. Just the way these things go. Ridiculous pop, and we take it right back. Doesn't have a reverse split in here, but looks the same. Yeah, maybe they cured cancer. That's the only reason that a biotech would just, cure some incurable disease. They're going to make bajillions of dollars. But be careful. The FDA can just outlaw their stuff. Like, that's why I'm so cautious on biotech, pharma, anything that Food and Drug Administration in the United States gets involved in. McCormick, that looks like a rough chart right there. That's a rough chart right there. Holding the 618. This is a setup for going even lower. Be very cautious. I'm talking about the top that we had right there in 22 to the low we had here in 23. These two tops in 24 and 25 were at the 618 of that drop right there, from 22 down to 23. 618 retrace, 61.8% retrace right there at 85.67. And this may drop on down and make a low in the 50s. Baba was red, but now we're turning a little green. I still expect this to rally on up into the 165 to 200 area. Aries management looks pretty rough. Maybe this made a bottom. Be very cautious. Need to see how it interacts with the daily roadmap line. It's entirely possible that we bounce off of it and take a spill lower here. This is investment managers. Let's see what pay a 2.9 dividend. It's not. That's why it's my double dip trade system. I chase dividends that are in the 7 to 12 area. This is way below that, so not the kind of thing I hunt for. All right, FUTU. Consolidating above the 618 retrace line there at 105. Still has the potential to pop to 139 to 150 area. AEP. Looks like American Electric Power Company is coming back down. Going to hit the roadmap line again. That would be my expectation on that one. Somewhere down here around $98 on the downside. And this may, it may not stop there. It may go even lower down in the 90s and revisit this low that we had in January. Right down around 90. Right there. All right, I did bring a bonus trade. Bonus. Let's see which. Oh, duh. I got it right there. WWD is the setup right here. That was the high. This is the low right there. And here was the entry right there on the close above the 618 retrace of that drop. There's the target. So the target is 201.02 right there. Stop below 169.83. Profit potential of $8.90 from yesterday's close. May be different. We'll go look at the live chart. WWD. Woodward right here. It did a bounce earlier. And we triggered an entry. So if you're in it from before, that already triggered an entry and we're just waiting. Now, we did a smaller bounce. We see this a lot where we get a bigger bounce and then we do a smaller bounce and then we go on and hit all the targets. So smaller bounce right here. That was the entry. We're actually getting a little red, so it's a little better risk to reward. This lowered the target to 201.02. Stop is below this low, but if you're going for the bigger target from this high back here in November to this low back here in December, that would be a bigger upside potential. So we've got the high there in February, right around 196 to this low right here in March, down here around 170. We came up pretty strong off of that, triggered the entry, and that 201.02 is the official target for this bounce right there. Now, this thing is based on 28 trades, slightly under a statistical population of 30. They typically last 30 days on average. Average is a magic word out there. Take two of anything. One's above average, one's below average. Somewhere in between the two is the average. Now, if your two things are very similar, your average is pretty, the standard deviation on your average is pretty tight. I don't have the standard deviation on this, so you can't really take it and add two standard deviations and know. I mean, maybe I should do that in the future, but it takes a lot of work to add that statistic to this. So typically, on average, 30 days. Right there, you add two standard deviations to it. That's where you can find 96% of the time you'll be correct on your time. Still that outlier that could go past it. So 30 days on average. What does that mean for us? Pull this out. 30 bars, which is 43 days, a month and a half on average. But sometimes things last twice the average. That could be 87 days on your calendar. Why is this different from bars to actual calendar days? It's because the market maker, the candle maker, isn't open on the weekends, and it's not open on holidays. So once we get out to June, we've gotten a few holidays and a few weekends, and we've accumulated about 20 extra days, almost 30 extra days in the trade that weren't open market days. That's just 2 times, and this could go 3 times, 4 times, 5 times the average. So it could be out here in June before this actually comes up and hits that 201 target. All right. If that was helpful, beneficial, let me know in the chat. I appreciate it. My expectation for today is to grind on this roadmap line. NASDAQ still needs to push in and through. We're into that major resistance from 5,800 to 5,900. Right into it. It's going to take some effort for the market to push on through. I like the enthusiasm yesterday. I would like to see more of that. Get us on through. Kind of clarify the situation. I'm not sure we can do that before we get into April. It's possible. But I think the tariff talk and all this decision is supposed to come out next week. We've got a week to do it, and then we get probably some more volatility. So we may push up. It's possible. Plausible. Like I said before, that when I looked at the ES chart, it's plausible that we push up in this area right here over the next week and then get a pullback based on the tariff news and whatever news, and then earnings start coming out and rock us higher. I don't know how it's exactly going to shake out. We are trying to push through on the futures. If we can stick it, this will be the next resistance right up here, right at 6,000. Then we may come back to the 5,800 area before we can go on higher. It's kind of what I'm watching just for today. I'm not expecting a lot unless we can start breaking free. You can watch the smaller time frames. That's where I usually live. 5-minute roadmap line holding, still bullish. We start getting below it, we're going on a bigger retrace, maybe to the 15-minute, maybe even to the 30-minute roadmap lines. So there is potential for downside today, back down in this 5760 area on the S&P 500 futures. If you look at the actual cash index, those kind of numbers will be something like back down into the 5700 area. We retraced it, retested, hold, turn back higher. So potential for like a 70-point pullback. And then if we go even higher, we're just sitting at the 1 hour. So can we get through this on the first attempt? Or are we going to retrace it to the 30 minutes and then come back at it? That's the big question. I don't have an answer for that exactly. I'm thinking we're going to keep grinding higher. It's my expectation. Probably not going to make a lot of trades. So there you go. I'm still very much margin limited right now. Not making a lot of trades. I've got my position that I built during the drop. Maybe went a little too early. And I just got to ride it out at this point. Cold dose of reality for me. Have a great day, everybody. I'll see you 30 minutes of awesome, 5 p.m. Eastern.